Islamic banking, also known as Sharia-compliant finance, is a system of banking that operates in accordance with Islamic law, Sharia. It differs significantly from conventional banking in its guiding principles, which revolve around fairness, transparency, and the avoidance of activities considered haram, forbidden, in Islam. Over the past few decades, Islamic banking has emerged as a crucial financial system, not only in Muslim-majority countries, but also in non-Muslim countries, reflecting its growing influence and appeal worldwide. This video explores the principles of Islamic banking, its unique financial practices, and its expanding global significance. Islamic banking is grounded in several key principles derived from Islamic law. The most fundamental of these principles is the prohibition of riba, or interest. In Islam, earning money from money, such as through interest on loans, is considered exploitative and unjust. This stems from the belief that wealth should be generated through genuine trade and investment in assets, rather than through lending at interest. Another critical principle is the concept of gharar, or excessive uncertainty. Islamic banking prohibits highly speculative transactions, as these can lead to unfair gains or losses. Instead, transparency and clarity in contracts and financial agreements are emphasized to ensure all parties have a fair understanding of their obligations and risks. Furthermore, Islamic banking forbids investment in businesses or activities considered haram, such as alcohol, gambling, pork products, and pornography. The ethical dimension of Islamic banking ensures that the financial system operates in a manner consistent with Islamic values, promoting societal welfare and justice. Financial practices in Islamic banking to navigate the restrictions imposed by Sharia. Islamic banking institutions have developed several unique financial instruments. One of the most common is a cost-plus financing structure. In a mudaraba transaction, the bank purchases an asset on behalf of a client and then sells it to the client at a marked-up price. The markup represents the bank's profit, and the payment can be made in installments. This structure allows banks to earn returns without charging interest, thus adhering to the prohibition of riba. Another widely used Islamic banking instrument is a profit-sharing agreement. Arrangement. One party provides the capital, usually the bank, and the other party provides expertise and management, typically the entrepreneur. Profits are shared according to a pre-agreed ratio, but in case of loss, only the capital provider bears the financial loss, while the entrepreneur loses time and effort. This risk-sharing model aligns with Islamic principles, as both parties share in the success or failure of the venture. Ijara is another common product, resembling a lease agreement. In an ijara transaction, the bank buys and leases an asset to the client for a fixed rental payment. At the end of the lease term, the client may have the option to purchase the asset. Like mudaraba, ijara avoids the concept of interest by structuring the transaction around real assets and rental payments. Another critical concept in Islamic banking is takaful, which is a Sharia-compliant insurance model based on mutual cooperation. In takaful, participants contribute to a shared pool of funds, and in the event of a loss, the pool is used to compensate the affected members. Unlike conventional insurance, where premiums are paid to a company in exchange for coverage, takaful operates on a mutual basis, emphasizing collective responsibility and cooperation among participants. Islamic banking has witnessed remarkable growth over the past few decades. As of 2021, the global Islamic finance industry was valued at over $2 trillion, with Islamic banks operating in more than 60 countries. This expansion has been fueled by the increasing demand for Sharia-compliant financial services among Muslims, who make up nearly a quarter of the world's population. In the Middle East and Southeast Asia, Islamic banking is deeply integrated into the financial system. Countries like Saudi Arabia, the United Arab Emirates, Malaysia, and Indonesia have well-established Islamic banking sectors, with many of their major banks offering both conventional and Sharia-compliant services. Malaysia, in particular, has positioned itself as a global hub for Islamic finance, with robust regulatory frameworks and a vibrant market for sukuk, Islamic bonds. However, Islamic banking is not limited to Muslim-majority countries. In recent years, non-Muslim countries, including the United Kingdom, Germany, and the United States, have seen the rise of Islamic financial institutions catering to both Muslim and non-Muslim clients. These institutions offer products that adhere to Islamic principles while appealing to the ethical considerations of a broader clientele. For instance, Islamic banks' emphasis on ethical investments, fairness, and social responsibility resonates with a growing number of consumers concerned about sustainability and corporate ethics. The sukuk market has also played a crucial role in the global expansion of Islamic finance. Sukuk are similar to conventional bonds, but instead of earning interest, they provide returns based on the performance of underlying assets. Governments and corporations in both Muslim-majority and non-Muslim countries have issued sukuk to attract Islamic investors, further integrating Islamic finance into the global financial system. Despite its rapid growth, Islamic banking faces several challenges. One of the primary challenges is the lack of standardization in Sharia interpretation across different jurisdictions. While the basic principles of Islamic finance are consistent, scholars may differ in their interpretations of specific transactions or financial products. This lack of consensus can create difficulties for cross-border transactions and the development of a unified global Islamic finance market. Another challenge is the relative complexity of Islamic financial products compared to conventional ones. For instance, structuring a murabaha or mudaraba transaction requires more steps and legal documentation than a simple interest-bearing loan. This complexity can increase costs and limit the accessibility of Islamic banking to smaller clients or institutions. However, the opportunities for Islamic banking are substantial. As the global Muslim population continues to grow, so does the demand for Sharia-compliant financial services. Moreover, Islamic banking's ethical principles, such as its prohibition on speculative investments and its emphasis on fairness and transparency, align with the increasing global interest in sustainable and socially responsible finance. Technological advancements also present an opportunity for the Islamic banking sector. Fintech solutions, such as digital banking platforms and blockchain technology, can help streamline Sharia-compliant financial transactions, reduce costs, and enhance accessibility. By embracing innovation, Islamic banks can expand their reach and offer more efficient services to their clients. Islamic banking offers a unique and ethically grounded alternative to conventional banking, built on principles that prioritize fairness, risk-sharing, and social responsibility. Its distinctive financial instruments, such as murabaha, mudaraba, and ijara, enable it to operate within the framework of Islamic law while serving the financial needs of individuals and businesses. The growth of Islamic banking, both in Muslim-majority countries and globally, demonstrates its increasing relevance in the modern financial system. As the world becomes more interconnected and consumers seek financial services that align with their ethical values, Islamic banking is poised to continue its expansion. However, to fully realize its potential, the industry must address challenges related to standardization and complexity while leveraging technological innovations to enhance its efficiency and reach. In doing so, Islamic banking can contribute to a more inclusive and socially responsible global financial system. If you're enjoying our content and want to see more, don't forget to hit that subscribe button and like this video. Your support helps us grow and reach more people. Also, if you'd like to help us produce even more frequent and high-quality content, consider contributing to us on Patreon. Every little bit helps, and it means the world to us. So, share with your friends, and let's keep this journey going together. Thanks for all your support.